Hey everyone, hope you had a great trading day. Obviously, we have a tale of two tapes going on here, and we're going to jump right into it. So first and foremost, everything will be in alphabetical order. I'm going to go over about 20, 25 stocks. About three of those are going to be the indexes, and I'm just going to keep them in alphabetical order. So let's just jump right into it here, and let's get started. So the very first one I want to talk about is Apple. Apple's one that we've been in the newsletter since 133 and three quarters. Now let's just look at what's going on here. We just have to understand what's really truly happening here. So you're seeing this volume kick in, and we're pushing right against this level, but we're seeing a lot of selling off. So it's not realistic to assume that only a handful of stocks are going to come up. What will happen if we come down or pull back is that this will correct, just like everything else is correcting, right? So if AMD is going to come down, if NVIDIA is going to come down, if all these names are going to come down, then it's just a matter of time before these names come down next. So that's how it works. The leaders will be the last, the real leaders will be the last to drop, which are Apple and Microsoft right now. So if you're not willing to risk some of what's going on here, if you don't take out a new high and the first day that you're not hitting a higher high, you're probably going to want to be out of it because it's going to tell you that it's exhausted, at least on the short term. Doesn't mean that it continues, but you don't have earnings until July 27th. And I know this is not their best quarter. So just understand that coming into it. But I like it. I think it looks great. But just be aware, you have to look at the overlying market and what's going on right now. And right now what's going on is that you're sitting right at this level. So you have to clear it. And I think you have the possibility of doing that if this market picks back up. But if the market continues to roll and punish individual names, then it's something that we have to be aware of. So let's just keep going through them. But I do like it. I do think it can break, and I do think it can go higher. Just be aware that it might come in a little bit there. So AMD was obviously disappointing today. This is one that I have in the newsletter from 94, bought the breakout, went to 96 while we were in it, and then came all the way back down and stopped us out here. I mean, that's it. Trade's over. That's a really big rejection bar, and I'm not so sure as to why it's so much greater than the rest of the market today, but it was. So we need to take that into account. And when something just is continuously doing that, it's almost like something's coming. But that is a clear rejection of this level, of this level, and of this level. And when it happens, just get out onto the next trade. I mean, the way that your trade should be set up, everyone, is that, if you lose 3-4 points on one trade, okay, and it's a $90 stock, it shouldn't really be the end of the world. It's 3%, and your position size should make sure that you just don't get hammered on them. But if you're worried about 3%, then you need to be making 10, 15% on your trades, right? That's how you have to look at it. For people that are newer and beginners, just think like that. Like, I don't want to lose, 3% on a trade and then make 3% on another trade and sell it. It's silly. So just consider that thought process. AMEH. So these are just fib levels that are in here at this point. This was one from the newsletter a long time ago. Well, not from the newsletter. I'm sorry. From the top 10 buy list that we put out every Saturday. And if you don't subscribe to the channel, you might want to. We put out a ton of ideas daily. We do a pre-market morning show. We also do several notifications where we just do something like random ones as well. So you're going to want to know when they are. We also do a Sunday one, which seems to be pretty popular lately. And if you want to be notified of this as well as the educational videos, just click subscribe. That should be down here in the corner, and turn on the notifications. So that's my little spiel. Anyway, AMEH. So this broke out down here, right? 37, and we have entirely too much on it. So let's just get rid of all the horizontal lines. And we'll remove the fib sequence now. We saw that it was up here. I mean, you can go back and look at it. So we broke out here, and then usually when you break these trend lines, you can go parabolic. This one parabolic. To me, straight up is not a position. That is not a chart position. So to me, this is getting ready to blow off and come back. Now, if you want to look at stocks that have done similar patterns to this and what can happen, okay. So see how you blew up here, and then you had this wick, which clearly said that that might be enough. That was enough on a sun, right? So, and then you can see how this worked out as well. So these patterns don't end well. Okay, they break down, and that's the end of it. The momentum's out of it, and it's over. The trade's over. So you could see something like that. This could be setting up for that. The only reason why I'm apprehensive to say that now is the time where you're going to see that happen with AMEH is because we're closing on full bars. So we open at the low, we're closing at the high. We're opening, gapping up, come back, retesting, opening, going back off the open and closing at the high on huge volume. So I'm apprehensive to say that now. What I would do if I was in this, if I saw a bar where I closed like halfway up and I had this wick sticking out, right? Like, let me find one. Like something like, not even like that. Gosh, this stock's so strong, you can't even find one. Let's turn these off for a minute. We'll find one. So what you're looking for is something like this, right? Where you have a little bar where you have a wick on the up, a wick on the lower side, something that shows that you're getting tired. Right now, I don't have anything that's stating that on this. So I would just go with it if you're in this and just constantly be moving my stop up. My absolute drop dead stop if I was in this would be here, 72.50. So Amazon had a great day, right? The other day, and now we have this little doji up here. You're really going to have to be very, very careful with Amazon now. So this lower low, if you take out a lower low of this, that's it. It could be the it could be where you want to consider getting out of the trade if you're not willing to go back to break even. And I say that because you should be able to recognize this pattern from the candlestick videos, which I will link again, the Candlesticks That Work video for those that haven't watched it that are new. I strongly recommend that you watch it because we go over patterns that actually work. But this is a perfect, setting up perfectly for an evening star, right on the breakout. Open, close, low, high. I mean, it's perfect. So breaking below this could really set you off. And as I said, the leaders are going to fall last, right? They're going to fall and probably rally the next day, and then this is all going to be behind us. Like this is not going to last. It's just we're just going to correct a little bit and then go back to business as usual. But that doesn't mean that you can't go through pain. So for Amazon, what I'm suggesting is if you're not willing to retest this level, which is really where its support is, right? If you're not willing to go through this, if you take out a lower low here, you're going to want to be out of Amazon. That's how I would trade it. Facebook, I just want to go over very quickly. So I got a lot of questions about this one. You know, here's the thing. Like if you're looking at it from this perspective, you look like you're in a flag, right? And I just want to show this. There are times when certain indicators are better than others. Okay. And then when you should be paying attention to them more than others. When your stocks have ran up and you're starting to see cracks like we're seeing in the IWM, which is now obviously spilling over into some of the other areas. Okay. When you start seeing cracks like that, it's really important to look at your stocks and seeing if they're closing above or below the 8-day moving average. And I use a simple moving average. You can use an exponential. I don't really care. It's, you're splitting hairs when you look at the movement of them. But when you see this, right now, I ran up to this line, I rejected, I opened, came up, went below the open, closed at the low below this. To me, this is setting up as a perfect short down to this level, down to 340. That's how I view this trade. So if you're not willing to go back to this level of 341, then this is something that you need to seriously consider. If you're not willing to do that, you seriously should be considering moving on here. And the reason I'm talking like this and being a little more cautious than I was the other day is, the breath was bad this week, right? And that's okay. But it can't be 3 or 4 stocks that go up and everything else goes down. So it just can't be that way, right? And you're not seeing any volume. What will eventually happen is people will just get out of the way. And that's what you're seeing. That's what you're seeing happen. So just consider that. We saw cracks yesterday with NVIDIA that we'll get into on what I saw. And so let's just go to this FRHC. So this is what you need to, this is exactly the kind of stocks you should be looking out for right now. So if you're not willing to come back down to this 65 level, it's probably over. Okay. So here's my wick, 68.17. I've rejected and failed. I've rejected and failed. Okay. 3 times I failed this level. My volume's going away. If I'm not willing to test this and then see if I push back up, it's probably time to get out of this. I would not be a buyer of this. I pay very close attention to stocks that are doing this, especially in this kind of environment, right? Because they're the ones that are coming in. Just like AMD came in for us with these wicks that couldn't stay above this line. Okay, this is doing something extremely similar to that. So just keep that in mind. So I would not be chasing this at all in this environment. And if you're not willing to go back to the 8 or, hopefully you stop at the 8 and you don't test the 21. But the 8's your first line of defense, obviously. But you're going to have to watch that. But not being able to get above those, I would be all over watching that. FTNT, I mean, if you're in this, just stay with it. I mean, there's not really much to say. You're just been on a monster run since the beginning of the year, and it's not even paying attention to what's going on with the rest of the market. These lines are they're just going straight up. And, look at your 21 day, your 50. I mean, it's beautiful, right? Ever since you broke out down here at 135, you're up, you have a double. But what do we do about this? I mean, what is the real thing to do here? Well, the number one thing to do more than anything is to understand what's going on. And then what are we going to do about it? So we have a channel here. We flipped this channel and got up over it. What does that mean? That means that we're probably going higher. And in this kind of environment, that's extremely impressive behavior. Look at this volume line and how it's actually curling up. So if I was in this, I wouldn't necessarily buy it here, but if I was in this, I would just hold on to it. And I would just be using something as simplistic as, dependent upon where I owned it, I would be using something like a close below the 21 day. I don't know that I personally would give it this, right? I don't know that I would give it that much leeway. That's a lot, right? That I don't want to give back. I don't really want to give back 25 points. So I may cut it at the 8 day if it closes below the 8. It obviously holds the 21 more, but there are days like this day where it closed below the 21 and then came back out. But I would use the 8 day, and worst case, absolute worst case, you could use the 21. And here's one thing it hasn't done, and you could use this, right? So you really haven't taken out a lower low. So if you close below that open, you don't even need to wait for the wick. Just get out of it. And that's 237.85. But again, this FTNT, I'm not saying buy it. I'm saying at this level that you have to kind of think of your stop strategy. So I just want to go through this. This is the IWM. This is the Russell 2000. These are just notes from the newsletter. If you don't get the newsletter, there is a free version of it that comes out on Wednesdays, which is today. And there'll be a link in the description. Just sign up for it and you can get out and kind of follow along with the updates as to what we do as far as stock positions and, indexes and color commentary. But what I was talking about the other day or yesterday in the newsletter was here. I was talking about how we just could not hold these levels. And that's exactly what's transpiring here. Look, like you just can't hold this, right? So bonk, bonk, bonk. And I always say this, and it's true. If you keep banging on a door long enough, it's going to break. Well, this is setting up to break. I mean, that's becoming increasingly clear here, right? That this is setting up to break. So that's how I would focus on this. I would be out of small cap names. I was pretty vocal about that yesterday. I hope I was vocal about it again today, this morning, for those that follow along. But 1, 2, 3. So this pattern of 1, 2, 3 is called 3 black crows. You don't want to see this. It's not, it's not good. I'm laughing because I'm trying to, express this as clearly as I can without just, creating some level of panic in people. But 1, 2, 3, right? When you see 3 black crows, you can Google the pattern. You don't want to see that. You just don't. It's about as nasty as you can get. And this M, I mean, everybody's kind of aware of what an M top looks like, right? I'm sure we've all heard of M tops, W bottoms. So what does that look like? I mean, it's right there. So I'd be very, very careful of anything. And what the issue that you have to watch more than anything is when one index goes, it eventually will trickle down into the others. And we've had a tale of 2 tapes for a while, and I'm not sure that that's going to continue without some pain first. So just keep that in mind. But overlaying these indicators, I'm below the 8, I'm below the 21, I'm below the 50. If you're buying a small cap stock or looking at a small cap stock, I don't understand why right now. I mean, I'm going to be that blunt. I don't know what you're seeing that's telling you that you need to be in a small cap name. So where I'm going with this is avoid small cap names right now. Mega caps. It's all mega caps. We're doing very well this week trading mega caps. The Amazons, the Apples, the Microsofts. I mean, they're working. NVIDIA hit a new high today before it backed off. All those stocks, the mega caps are what's working. But you are seeing cracks there like you did with Facebook, right? Closing below the 8-day. This is setting up to break. So if 82.53 goes, this is done. And get out of the way because it's going to just sell straight down, right? You're in a much faster market cycle right now with faster rotations. So when these go, they're going to drop. So this can obviously come in. And I think you can get down to that 79 level. So if you break here, you tried once, couldn't get above it, tried twice, failed. Okay, now you're below your 8-day. It's not where you want to be. So just consider that. Lulu was one that we looked at in the top 10 list. Look, it's doing what it needs to do. I'm just going to be very blunt here. I didn't pull the trigger on this, and I'm just going to explain why I didn't. And it doesn't mean that it doesn't work, and I want to get that point across. Let's clear all this out, all these segment lines and everything, and just talk for a minute. So, well, I said all of them. There we go. So here's what I'm getting at when I was asked about this today, so people can kind of understand, even if you don't follow along in the community, you can kind of understand where I'm going with this when I talk about it. So like, here's the issue, okay? If I don't have volume, the probability of the breakout failing is greater. That's why people want volume, because that means that there's demand. I want to be in stocks that people want, right? Doesn't mean that it can't keep going up. It just means that the probability of the trade failing is greater. It doesn't mean that you are not putting on the trade. There are people that simply trade patterns. There are people that don't even look at volume, right? There are people that simply look at stuff like this. They'll look at bar charts, get rid of the indicators, and just trade patterns all day long. They don't care about moving averages. It all depends on what works for you. What I go over is what has worked for me, right? And it doesn't mean that there's not another way to do things. So just understand that. If you see it and you want to execute. Maybe that's your style. Maybe your style is that you don't really care if you see volume or not, right? That could be completely up to you, but that's not how I trade, right? When I see below average volume, I'm not getting involved. Again, does not mean that the trade doesn't work. So that's it. And for those that are new today that are listening, I try to give color commentary on what has worked for me in the past. So this NEG closed at 67, and after hours, you're just going to go through some pain, 60. Look, if I was this company, I would issue a secondary any day now. I don't know when they're going to do it, but if you were down here and your company was at $11 and you could sell stock to raise capital 600% higher, why wouldn't you do it? So I would argue that that's coming and to watch that. But for those that are in this, congratulations. I was asked today in the chat room what I saw when I called out that it was going to go again. So I can kind of walk through it a little bit. I don't want to get into too much detail because we have a lot of ground to cover. But I'll just give you an example so that you can kind of understand it. So, and I really did it off of this chart. So this is what we're going to do here. And then we're going to go, hold on 1 second. Let's throw these in. And we're going to throw in relative volume. And let's throw in, where's the RSI? There we go. Okay. And then we're going to throw in well, we don't really need the VWAP. We all know that it was above VWAP, right? I mean, we all are fully aware that it's been above VWAP. So, and then we'll close this back up. So the reason that I want to show this is what I'm looking for is I'm looking for a lot of different things to be aligned. And I'm just going to walk through this pretty quickly, but let's get everything. Okay. I guess that's as far as that one drops. There we go. And we'll bring this down. Okay, good. So now you can see them. So you can see all day long, this thing was just trading on VWAP. This blue line, let's get rid of these other lines because they're irrelevant to me. So all day long, every time this hit VWAP, that's all it did was bounce, right? So earlier when I was calling out levels on it, I was looking at the VWAP and then I'm looking to make sure that this is lined up, right? And then it's going higher. You can see that it's following the pattern. And then I just want to make sure that my volume is above average, which it's going to be. It should be in this in volume. So earlier when you heard calls, that was it. Coming down here was a test. This is where it was very clear to me that when you broke this level, I mean, just look at this. So, right, here's your wedge. You broke out of your wedge. You went here. See this spike in volume? See this uptick right here? I mean, it was pretty clear what was coming, right, on that move. So that was the other time. And then finally, the last one was the end of the day. And I'm just going to show you what I saw. So this is kind of a little more complex, but see this pattern right here, right? See that little pattern? So when we did this little knockdown here, okay, and you need it to trigger, but you have a little rising wedge here, right? On the 15-minute, when you broke this, come back down, okay? See how they bring it down to shake everybody out? And where does it do? Let's really zoom in on this because it's important. Okay, and let's pull this out of the way. And then we can slide this across. So they give us a lower low on the 15-minute on a rising wedge, right? So why? So that they know that if they trick that, or if they trigger that, people are going to be watching that and they're going to sell. So I would say, looking at this, you kind of got a little color that, well, they tried to take it down, but they couldn't. They got buyers. So what is a wick? A wick is price rejection. So we know this whole thing here was price rejection, right? That's not your trade, though. What you need to see, now that you have this hammer here, right, and this failed breakout, all you need to see is this higher high. That's all you need to see. And look at the next bar. The open was the low, broke that, right? And then what happened? Above average volume, this starts ticking up. Your RSI is ticking up. That was it. It was literally that simple for the people that were asking. So, but it just takes time to learn how to read them. And then you just want to see if it gets above this. And if it does, then you just keep watching that. And if it closes below this and you want out, you just get out of it. But that was it in a nutshell. So I hope that is somewhat helpful. But let's just get out of this stuff now because we don't really need it. And let's get rid of the VWAP. So I hope that is somewhat helpful for people to look at what I overlay. And, it depends on the stock as to what I'm going to do when I'm going to do it. But they're the majority of things that you should be looking at. There's some other stuff that you could use, but I would say that using RSI, relative volume, looking for volume spikes, making sure you're above the VWAP. Start there, and then we can always get into more of the intricacies later. But let's just keep going here. So see this line? See how you're breaking it? This is about as bad as it can get. I mean, this is really setting up to go a lot lower. So you have a complete failed breakout. I mean, a completely failed breakout. And I don't know what the volume was like on it, but we can look at it. But this is telling you that it's going lower. And it could just be people are just so apprehensive about anything that's China related after what happened this week. I'm apprehensive to say that, but it's sure feeling that way right now. Looking at some of these stocks, how they've just gotten absolutely decimated. But, from 55 to 46, you're down 20%. There's no way that we're not testing this. There's no way that we're not testing this 42. There's just no way. We're going to test it. So just keep that in mind. I mean, I don't see any reason for to think any differently than that. I don't see anything that's going to miraculously reverse this. These are pretty big red bars. Here was your bearish engulfing. We talked about this a couple of days ago. You had follow through on it. You broke below that bearish engulfing, and that was the end of it. So, I mean, these stocks, if you listen to them, they're telling you a story, and you just have to pay attention to it. And this one's telling you that it's had enough. Okay, and now you have this rising wedge. Look. Okay, then we have a rising wedge that we broke. Okay, and that's usually how rising wedge ends, right? With a long red bar down. And now the open, like here, look, I mean, the open was the high. I'm not trying to beat up on the person that if somebody's in this, but the open was the high, the close was the low. Like you got to go. I mean, it's time to get out of the trade. So I don't see anything here that is telling you that you need to be in this, right? This can get worse. So just consider that. There's no reason to assume that you're not coming down to this 42 level. So the video yesterday was pretty clear. I hope I was pretty clear that I thought that, we looked a little tired. I was asked to cover this last night too, I believe. So, I mean, why did I say that? So this is just a good rule of thumb for people to remember. And you can use it for any stock. You can use it for any stock, any index, anything, right? If you get good news and you don't really go up like a lot on that good news, your move might be tired. Now, on this move, we're tired. And that's pretty obvious after today. So we got upgraded yesterday to a 950 target, and we closed red on the day. Now, we had a nice price rejection, but as I was stating that, 800's on the table. So if you're willing to ride down 5%, stay in it. But now you have a red bar that encapsulated this bar, which is not great. I mean, technically, if you include all the pre-market data for the past year, you have a bearish engulfing at the top of a channel. I mean, that's telling you that you're going to break this level. Right, it's almost telegraphing that we're going to break the 8-day, which is where I believe I moved the stop yesterday and stated, I thought I did. Hold on one second. There it is. So, yeah, and I moved it to 799 because at that point you have to watch what's going on here, right? You have to pay attention to this. And I'm trying to give you a lot more process today because I think you're in a very difficult spot in the market where people are going to rush in to buy this dip across the board, and they're not understanding that the dip could last more than a couple hours. It could last a couple days. So do I want to buy it at the 8 or do I want to buy it at the 21? Right? You can't say you can't get to the 21. It was there in May. So it obviously can. So I don't know that we're going to break this channel again, but we could. So you just have to understand, don't step in front of a train. Just let it figure out what it's going to do and look for a setup and then get involved. And right now you do not have a setup. You have the exact opposite of a setup. You have a glaring yellow flashing light on NVIDIA. So planner, this was pretty evident that this was coming. you know, if you were watching Arete, you could see what was going on there. These trade in tandem now. This was one that we did from the newsletter, right? So we were in at 103, got stopped out at 128, 25 points we made. We got in down here and just rode it up. When you saw this crack and get below that 8-day, and this is what I'm pointing at when I was talking about Facebook, I'm trying to give a ton of process tonight so people can look for this stuff in their own positions. See how we broke that 8-day, right? And that was our sell, breaking this level, right? Saved 4 points on it today. If you thought that Arete was going to break down, but that planter wasn't, like there's no logic behind that. This is the exact same trade. They're the first or second largest shareholder. So if they sell down, they have to sell stock. And that's exactly what they did. Now you're sitting right on the 50-day of a cracked falling wedge. I don't see any reason why this is not going to continue down. If I was in this, I'd be very concerned. So to me, this is, you're hitting here if you're lucky. You're stopping at 21 if you're lucky. Other than that, I think that you have a lot more pain that this can go. A lot more pain. I think this can continue to roll down. Realistically, when you break a wedge, just to put this in perspective on where I'm going with this, wedges work both ways. When you break them to the downside, they work just the same way as when you break them to the upside. Okay, this becomes your target. Okay, so you could get to 17 based upon this break. So I don't see any reason, I don't see anything stopping me from getting there. You have all this in here. Maybe you have some volume that's going to hold you in there, but I'd be very, very cautious. QQQ. So this is exactly what we were talking about earlier, but let's just get right into it. So let's zoom in here on this, okay? Let me get rid of these indicators. So this is the channel that we were in. It's a rising channel. Today is day one of hitting the top of this and rejecting and closing lower. Okay, we haven't had a red bar like this in how long? So you need to be really cognizant of what's going on here. It's almost like they're trying to get out before jobless claim numbers tomorrow or something, right? The way the market moved today. So I would tell you, arguably, that you really need to watch what's going on here. This is the first crack that you're seeing in the Qs. And I don't think that the bull market is over. That's not what I'm saying. What I'm saying is nothing is a straight line. We don't go straight up. If you overlay these in, you could come to the 8-day, which would be 355, and still be in an upward trend. It just means that we're going to crack this minor rising channel. And that's not where you want to be, right? Now, if we overlay some other things with it, we can get some color and just throw in the Bollinger Bands. Okay, we're riding the top of that Bollinger Band. So it's very possible that we can just come back down and it doesn't really cause any real damage, right? But if you drop 1% here, just put this in perspective. If you drop 1% here, and let's just say that the number one index right now is the SOX, just to make it simple, right? Then and the SOX is probably going to have a 2 to 3% move, right, on something like that. Okay, well, if the SOX is going to have a 2 to 3% move, what are the high beta semis going to do if that happens, right? They're going to come in somewhere between 7 to 10%, right? See how that works? So that's kind of my point. So it'd be nothing to see a NVIDIA sell down 50 points, right? It's not the end of the trade. It just means, you know, we're going to base and then go higher. And this can happen. So I'm just saying that, you know, at this level, you need to just be a little cautious. Sale, I like this chart a lot. We tried to break out here. We're not really breaking down. If you look at this today, we're just kind of holding in here. So just consider that. Okay. Just consider that level. Okay. I do like it. Just watch that level. This is something you need to watch. This is a failed rally through. So you failed to get through today. You opened, you broke out, you closed at the low. It's not what you want to see. It's the exact opposite of what you want to see. So what you have to do is you have to think about what are you supposed to do with it now? Well, if you bought today, right, then you bought late, but you tried to buy the breakout. It didn't work. If you bought this breakout and then it came back down and closed below it the next day, you probably should be out of it. You can wait and see if you hold this line, this 1466, but that's pretty much it. If you break the 1496, chances are you're at least going to tag this, but you have to see if you hold above that 8-day or not. That's really what you have to see right now. So as I said, when they all collapse or when we sell off or correct or pull back, however you want me to phrase it, they're all going to eventually pull back. It doesn't mean that they're not going to bounce, sell last and bounce first. It just means that that's what's going to happen. So, you're seeing a lot of this today. This was when I was setting up to break out perfectly, and then we just got to the top, completely rejected. And that's what we refer to as what? A nasty red bar. And, on Snap, you don't want to go near it. You do not want to go near this. This is a complete and utter rejection of that level up here. I don't know when earnings are. You have plenty of time. So I'm not really sure. We can get rid of these indicators. They're not really relevant. Here was that rising wedge. We broke it to the downside, and that was it. There is no reason to be in this trade, right? You just stay away from it until it figures out what it wants to do. You have a wedge right here that if you break, you could get back to this level, 50. So I'm not saying that's going to happen. I'm just saying that would be completion of that pattern. So snow's just in this wedge. It's trying, it broke, and then it flipped and got back into it. Now we're wedged in here. I could throw in the indicators, but they're kind of irrelevant because we've been basing. And when you're basing and your indication lines are just going straight across, they kind of lose prominence. They're not really as relevant as when you're trending. Just keep that in mind, something to remember. So let's just open this up a little bit more and pull this down. So see how you're holding here? Then you broke, and then you're flipped, and you're wedged in between here. Now you're just waiting for it to break out. It could still break out in this market. I would just be cautious. That's all. But this is setting up to break out, and that is a pretty powerful bar. How was the volume today? It was okay. It wasn't great, but I do like this. I do like this. I do like how the bar was the open and the close. I do like that. So that's definitely one to watch. SPY, look, I just want to go through this. This closed at an all-time high. So right now, the strongest market out of the three is the SPY. Out of that group, you'll notice this. Okay. What does this look like? Right? That looks exactly like NVIDIA looked the day before it sold off, right? So when you start seeing this, let's go back and take a look at it, see what I'm talking about. See that bar right there? What is it, right? So let's go back to that. So we're looking at the SPY, and now we're looking at the XLK, and we're looking at the same exact bar we just saw in NVIDIA. So what is that telling you? It's telling you that I'm at the top of a channel, and I'm getting tired. So chances that this could roll back are pretty good. What two names are in that? 40% of it is Apple and Microsoft. So if this rolls, Apple and Microsoft will come in on that. Just FYI. So that's something to consider there. And the other one that looks great in this space is this XLY, the consumer discretionary is the second one. Everything else just is not acting well. I mean, the energy sector's done, XLE, they're not looking good. The XLF is completely broken. So none of them look good except these two. Consumer discretionary looks great. And so does XLK, but it doesn't mean that they can't rest. This is a big move, and it might be time for a little bit of a rest. So, but the SPYs look the best of all three indexes. TTD tried to break out today, completely failed and rejected. Okay, that's not really what you want to see. So I don't really like the action that I saw today. Frankly, if you take out that low, you might just want to consider just moving on and, and just waiting for another setup, because now you have to get through this entire bar before you really even see it go. I mean, all that selling that's in there now, all these people that are in here, now I have to wait to get through them, right? Because they're not selling. Most are going to hold. So that's not really what I wanted to see from the action on it today, to say the least. Let's just drop this Twilio out. So this 405.35 level is big for Twilio. You run up, you hit, you're running up, you hit. And this is what we have got going on right now. So we just have to watch it. But I'm not crazy about this trade at all. To me, it looks like it's getting tired. 1, 2, and you see these reversals? We close, we reverse down, we try again, we try to get closer, but we don't even get close enough as we did last time. And then we reverse down. Now we close on the low. So a lot of these, the movements today are telling you that the chances of correcting more across the board in tech are there. So let's see what happens tomorrow with jobless claims, but they are telling you that. So just be aware and have a plan and honor that process. So, I like how this is sitting here, this U sitting right on 103.66. If you break the 103.66, you have to get out of it. You're sitting right on your 21 day. You're sitting right on this trend line. You're sitting right on the support level. I get it, but you're going to have to, I get it. I mean, like this is exactly, I took this trade. I bought it here and then I sold it after it reversed on this evening star pattern up here. I like it. It was a very easy trade. It could possibly be setting up again, right? It could possibly be setting up here. 1, 2, 3, 4, right? That breaking through this at this crux, when you have that many lines, that a convergence, if this was to reverse through that, I would have interest, but it's got to do it. It has to break through for me to pay attention to it. Finally, Zoom. Let's just go through this. We are in at 368 in the newsletter with a 387 stop. This was not what we wanted to see today. This was the exact opposite of what you wanted to see today. We need to really hold these levels. And what I don't like about this move and why I would tell you to wait now is this bar is basically engulfing that bar. So I have a bearish engulfing right here. That's not where I want to be. Okay. I don't want that pattern right here on this crux. So especially closing at the low of the day, I don't want to be there. The reason I'm saying that is that can lead to 1 or 2 more days of selling. So why do I want to stay in it? Just find another spot to buy it, right? I don't want to go from, just so people understand how I trade. I don't want to go from 408 to 375. I would rather find my spot to get out, protect my capital, and then just move on to the next trade. So that's it in a nutshell. I hope you found it helpful. If you could do me a favor and please share the video and like it. I'm trying to get in front of as many people as possible to show them what it takes to truly be successful at trading. Thank you very much, everyone. Have a great evening and feel free to reach out if you need me for anything.